I actually get this question quite a bit from my clients. Why is my refund smaller and smaller every year? And the good news is it's not your fault. It's really no one's fault. It's just the mechanics of the return. So let's talk a little bit about that so that we can better understand it and figure out what works best for you. So, first, let's jump into our time machine and go back to 2016 and think about what the differences in tax laws were between 2016 and 2017. So back in 2016, before the Tax Cuts and Jobs Act, we had two components to the tax return. We had the standard deduction or the itemized deductions, if those were greater than the standard, and then personal exemptions for the taxpayer, their spouse, and every dependent on their tax return. So what happened was the Tax Cuts and Jobs Act came in and said, okay, right now the standard deduction is roughly $12,000 for a married filing joint. We're going to eliminate the personal exemption. We're going to go ahead and double the standard deduction. So my average client in 2016, their married filing joint, couple of kids on their return, I could take their standard deduction of 12, but if I add up the interest that they pay, the taxes that they pay, both state income tax and then property taxes, I add their charitable contributions, I'd probably get somewhere around the range of 14 to $16,000, which was slightly more than the standard deduction at the time. And basically, what was happening was their employers were withholding, assuming they would receive the standard deduction. So they were effectively over withheld because you had this gap of additional deductions that your employer didn't know about. So they were effectively over withholding on you. That's what was generating refunds back in 2016 and prior. So what happened was in 2017, the Tax Cuts and Job Act said, we're going to eliminate the personal exemption, but we're going to go ahead and double the standard deduction. So now my clients, when they were around the $14,000 mark, to get up to $24,000 is nearly impossible. So in 2017, this additional leap created huge refunds as a result. So after 2017, the withholding structure was also modified to adjust for this doubled standard deduction. And you probably filled out a new W 4 with your employer, or they should have asked you to fill out a new one. Or if you've gone to a new employer, you've probably noticed the difference between the 2016 and prior W 4, which was very, very simple, to a new super complex W 4 that is almost a tax return in and of itself. A lot of us still remember that old saying that kind of rolls off the tongue, married four, or meaning I'm married and I would have four people on my return. But that concept was discussing the exemptions which no longer exist under the Tax Cuts and Jobs Act. So the withholding structure changed and finally caught up to being the proper withholding based on the standard deductions now being doubled. Problem is, these were rolled out in 2018 and 2019. And if you don't remember, we had a nasty little thing happening in the world, COVID-19. So the education around this and frankly, the PR campaign wasn't very good. And a lot of folks still don't understand why do I get less and less money back every year? And that's really the reason is the withholding out of your paychecks should be less and your take home pay really should be more and on par in comparison with what you were having back in 2016. So now, for a lot of folks, their tax return is really close to zero, if not receiving a small refund or even owing a little bit as a result. There are additional complexities that come into play, such as having multiple W 2s in the same tax return. Maybe you have a taxpayer and spouse that are both working, and you have something in effect that is called the marriage penalty. We'll talk about that another time. So, how do you fix the withholding going forward? If you are not satisfied with the refund that you're getting or the amount that you owe in particular, what you should do is fill out a new W 4 with your employer. Alternatively, consider making estimated payments to fill that gap if you owe a substantial amount of money every year on your tax returns. Now, yes, the Tax Cuts and Jobs Act is currently scheduled to expire at the end of 2025, so the end of next year. So we'll record a whole new video and bring you all new knowledge if that ends up being the case with how should you approach that and create the maximum benefit that you are looking to achieve with your tax situation. So stay tuned for that in the event that the Tax Cuts and Jobs Act does indeed expire. So for now, hopefully that has given you a little bit of a history lesson with why does it seem like I have less and less of a refund every year. Interestingly, it's nothing that you've done, it's just the mechanics of the tax return, and you can fix that or change that by throttling up your withholding at work by submitting a new W-4. I hope this helps. Thanks a lot.